Hey everyone, Michael Wall here. Welcome back into the business segments where we're talking about selling your company, maximizing your value, keeping more, paying less money in taxes, all great things. Joined again with Nick Geraci, our private tax director. And Nick, this segment, we really want to talk about the idea of diversifying your risk outside of your business. You may not realize this, but there's a lot of risk that you can take if the majority of your asset or net worth is tied up in your company. And so one of the things that we can do, Nick, is talk about the idea of maybe exiting a portion of the company, some benefits and reasons of why that might make sense to do, as well as some other things along the way that business owners can be thinking about if they're not quite ready to sell their entire company. So let's start with the idea of kind of diversifying their risk and maybe taking some cards off the table. Remember the old know when to hold them and then know when to fold them, right? That's so right. Important. You might have a great hand and it's beautiful, but when do you fold and when do you hold? So let's talk about maybe a partial exit instead of an entire exit.
Yeah, I mean,
the benefits of that.
The fact of the matter is, with a lot of successful entrepreneurs, over time, the way they became so successful and built those companies is by reinvestment into the company. That means all of their profit is not going into buying other real estate or buying other, assets. They're trying to grow their company. And what that results in is 70 to 90% of their net worth being tied up in this, relatively illiquid asset. So what ends up happening is you're at the end of the road, or not the end of the road, but you're in a position where you're looking for a liquidity event. Maybe you're not ready to let go of the whole company. We see this a lot in the medical space, right? Mm-hmm. There are offers that we've seen that have worked out very well for our clients and families in the past where they sell 60 to 70, maybe 75% of the company and continue through an earn-out period where they maintain some equity, but they're not the main people in charge anymore. They continue performing their surgeries or operations, whatever it is that they might be looking at, for a later recapitalization event where they sell the remainder of the company.
Yeah. Yeah, I mean, it's so important because now you're in a place where you're literally taking some cards off the table. You're diversifying your risk. And Nick, they're in a place where they're saying, okay, now I can diversify in other things. And I'm not talking about just go put the money in the stock market, right? Because that's a lot of people are fearful of just ebb and flow. I don't want to do that necessarily. Mm-hmm. Lots of options outside of the market. But it's the idea of taking some monies off the table. And the other thing is imagine being a part of allowing your value in your company to grow by allowing other investors' dollars to come in to actually help you grow that business. And now your exit part two, when you kind of sell the rest of the company or another tranche down the road, might be as big as or potentially even bigger than the first exit that you got when you took a portion sale of the first company. That happens a lot.
Yeah.
Right? I mean, it's so important.
These big companies will come in and utilize their infrastructure and the buying power of having the big company and the resources to help supercharge this great thing that you've already been able to build. And that translates to larger multiples and bigger checks at the end of the day.
Yeah, it's important. So when you take a look at your business and you take a look at what you're doing, another great way to think about this is there might be folks that you have at your company that you want to sell maybe a portion to them. And then they continue to grow it down the road. Maybe you're a smaller company. It's, under 20, 30, 40 million. And you're in a place where you have great employees that are executive level or that you see potentially taking over down the road. And you don't just want to hand it to them, but you want to do it strategically. But you also want to be in a place where the business revenue can support, maybe they don't have the cash flow right out of the way, Nick, but maybe the business revenue can support that person, maybe getting a loan, borrowing against whatever to be able to pay you what you need, so you're pulling equity out of the company, or you sell a portion to a private equity. There's so many different ways it can be done. The idea here is not do it this way, or do it this way. The idea here is really be thoughtful about the fact of things can change. I mean, if you've been in business for over 10 years, 15 years, 20 years, things change. And as they change, what we know for sure, Nick, is there are no guarantees.
Right.
And as that happens, we want to diversify well to ultimately protect not only our wealth, our purchasing power, our lifestyle power, and our ability to create legacy wealth for families, if that's important to folks along the way. And one of the ways that we can do that and protect that is by not just putting our head in the sand and just saying tomorrow and the next day and the next day are going to be just like it is today. We're saying, no, we need to be thinking about how things shift and change. And it's okay to take some cake, I'm going to call it cake, off the table. It's important. I think that's something that people need to hear that own companies.
Yeah, because like we've mentioned before, you get so ingrained in the day-to-day process of running a company. Sometimes, even if you're looking for just your own company, the big picture you miss the big picture. You're not seeing the forest for the trees. So just to emphasize, having the right people around you to help you see the different angles results in a much better planned future, right? Being proactive about these things, because the problems don't go away, right? They either compound or you attack them head on. So it's important to make sure you got everyone in your corner working toward the same result that you're wanting for your future.
Yeah, it's a good point. And we did do a segment on these business series, talking about getting the right team. If you haven't watched that, make sure you go back and watch that. Listen, I think it might warrant taking 10, 15 minutes of your time and just have a quick conversation around, does it make sense to take some equity out of your company? Is there even a potential or opportunity to do that? How do you do that? How do you find the right business broker? How do you find the right folks that might be interested in buying some of your business? And what does that process specifically look like? If you have questions around that, there's links on this page. Fill out your information. The teams that we have at the other companies, Wall Private Wealth, Wall Private Tax, and others, have done a great job at helping families really evaluate what should and shouldn't they do, and really what their options are when it comes to this. So pay attention, take a few moments, and plan well. We'll talk to you next time.